All right, all right. Today we had a very volatile start to the morning with a large gap down across the indices, and SPY did finish down 1.41%, and we did gap down closer towards 594, which was very close to a gap fill, and then we saw buyers stepping in on a decent volume day, pushing price higher. Now, I do want to highlight the benefits of being a trader is on a day like today, a lot of people likely got hurt. They did not see this coming. But as a trader, following discipline and understanding how to trade a chart, when you get a very vertical move like this that leaves lots of open gaps below, you always want to lock profits and not be greedy. And what I want to illustrate tonight is looking at this 3-month chart of the triple Qs. You can see there's lots of volatility on this chart. And in the last 3 months, the triple Qs are up 3.37%. And then in the last 1 month, there's also lots of volatility, and the triple Qs are up 0.52%. Now, if you compare that to our trading account that we're trading on TSE Trade Alerts, you can see today that we were only down 0.11%. So on a day that triple Qs dropped 2.74%, we only had a very minor decline of 0.11%. And in the past month, we are up over 4%. And then in the past 3 months, we're up over 20%. And you can see today we're essentially still at all-time highs in the top right of your screen. You can see on January 27th, we're here at 16,503. And then a couple of days ago, we were at 16,510. So we're essentially still at an all-time high, even though the market just dropped over 2.7% for the triple Qs, which is what we trade. So that is the benefit of being a trader. Keep in mind, this is just a public account where I take all of the trades, whether this is 1.6 million, 10,000, any number you pick for this account, you're going to have the same exact percent performance because all of my trades are based on percent trading and not the size of your account. So this is that growth curve that I've been telling you is the benefit of being a trader. And these are the alerts you're going to get from me if you join TSE Trade Alerts. And as you can see, we are absolutely blowing the market out of the water and absolutely crushing the market. So when we look at this chart, you have to remember all of this volatility is opportunity if you know how to take advantage of it. And that is why I spend so much time talking about risk management and risk reward. Because if you're getting yourselves in the best risk reward setups and you know when you're supposed to be greedy and you know when you're supposed to be fearful, it is usually going to be the opposite of the crowd. As I told you many times, down here when everybody was fearful, we were buying the dip. And then up here when everybody was starting to get greedy, I even made a comment that the same bears that got trapped down here were likely going to turn into bulls and then start buying long positions right before a big pullback. And that is exactly what happened. And that is why the majority of traders lose money. And that is why the majority of people do not make money doing this. It is not necessarily easy because there is a lot you need to learn. And as anything in life, you have to practice it and continue to get better at it. But you will find that the majority of your emotions will usually tell you to do the wrong thing. And that's why I always teach that you should be trading price action without emotion. And it should be based on following a trade plan around price on the chart. So price on the chart told us we were getting a little too overextended. We were looking for that pullback. And that is why we were able to lose barely any money today. The whole trading account is only down about $5 from the previous all-time high, even though the NASDAQ 100 was down 2.9% today. So keeping this very simple on SPY, you can stay bullish above this support, which is now right around 593. It is possible we get a little bit more of a bounce and then still come down lower. So be aware of that. This is a very real possibility that we start to bounce, put in some kind of lower high and finish a deeper correction. But as long as SPY is above 593, you cannot rule out the possibility that this was just our next higher low within this bull market as we just continue to push higher towards that price target, which will be above 608. We're looking for 616 and then 624. This is a real possibility. I'm not saying it has to happen this way, but you should be prepared for more upside. And you should not be expecting any bearish outcomes unless we put in a lower high and then come down here and slice down through support with a lower low. And then in that scenario, I'm looking for at least 585. Now, one thing you need to understand is that I constantly give you the bear and the bull scenarios. And then I tell you, let price do all of the talking. And that's why I told you whether the market's going higher or lower, we could not care less. We are going to make money as traders no matter what. And once you understand why that is, and not necessarily that you're just trying to guess the direction of the market, if you give time for the price to tell you where we are going based on critical levels, That is where you're going to get the best risk reward setups with the best probability. And I know that doesn't make sense when you're first starting out, but the more you do this and the more you actually read charts and follow price, it is going to start making sense. And of course, my opinion, that's how you're going to have profitability over the long term. So on SPY, it's really just going to be as simple as watching this support down here right around 593 to 594. If we break down below it, that is definitely bearish, and that means you should be getting risk off. But if we don't break down below it, it could be extremely bullish, and we could be about to go on another face-ripping bull rally. Let's give it a couple more days before I give you my preferred scenario, because right now I do like a 50-50 coin flip here. I don't really have a strong conviction other than the fact that I do think we're at least going to get this little bit of a bounce. I don't think we're just going straight back down lower tomorrow. And I know a lot of people are going to try to give narratives and reasons why the market was down and yada, yada, yada. But if that were true, ask yourself how I knew to be out of the market on Friday when the market closed way before any news even came out. We could argue and debate whether or not that was a coincidence, but I'm not interested in that. All I'm interested in doing is making the next best trade and staying profitable. On the NASDAQ 100 triple Qs, we were down 2.91% today. And just like I said on SPY, we had that huge gap down. We were all the way down here near the gap fill at 510. That gap did fill today, and now we have a new gap to fill to the upside at 528. So as long as the triple Qs are above 510, I see no reason to believe we can't bounce higher to at least try to fill that gap. It doesn't necessarily have to fill. We could put a lower high in and then continue lower. And we also do have a gap down here at 493. So this obviously is the risk to the downside if you're a bull trading long, but we'll know this is more likely if we break down below 510. And if we don't break below 510, it's possible we go straight into the 540s. So be very disciplined here. I think in the short term, the bounce is the more likely scenario. And then once we start continuing to see the price from that bounce, we can make a higher probability decision on whether we're going to continue higher or get a lower high and a rejection lower. Let price do all the talking around 510 on the triple Qs. And the immediate resistance is right around 517. And then above that, a gap fill at 528. So stay disciplined and focused, follow price and let the chart do all the talking. And remember, if you want to absolutely crush the market like we are already doing, you can join TSC Trade Alerts and get the exact alerts for the percent allocations that I am personally doing for the TQQQ or SQQQ. And that is that account here where we are still at all-time highs even after a day like today on January 27th. You can see right here on your screen where the NASDAQ 100 was down 2.9%. And on this account, you can barely even see a blip on the radar. That is how you control risk, and that is how we crush the market. Because on a day the market is down nearly 3% and we were in cash being disciplined, we just got ahead of the market nearly 3% by simply just being a disciplined trader. So you can find out how to join TSC Trade Alerts in the description of this video. And remember what I keep telling you about probabilities and risk management, because that is truly how you are going to be a profitable and disciplined trader. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.